We are joining you from the sidelines of ET Now Market Summit 2026, and we are in conversation with none other than Mr. Sailesh Bhan of Nippon India Mutual Fund. Mr. Bhan, thank you so much for taking your time out and joining us here on ET Now. Several concerns around Indian equity markets, one of them being FII outflows. Your thoughts on when FIIs will make a comeback in Indian equity markets?
See, generally, if you see the FII outflow construct, why is it happening, right? It's happening because they are finding opportunities somewhere else, which today appear more attractive relatively for them, right? For us as Indian investors, what's the advantage here? Because of significant FII sell-off, you're getting world-class businesses today at sensible prices here.
Right.
So our focus should be getting our portfolios right in this environment. And if you get that right, then the outcomes, whenever foreign investors return, I think is a great opportunity because they would also want to own India's best businesses, right? That is one. Now, when would they turn, right? Nobody has a clue, right? But the idea is the longer they don't turn, the greater the valuation advantage you live in India.
Correct.
See, what is the price moves up because everybody is a buyer, right? There's a problem. So today when expectations are low, there are few buyers and more sellers. That is where the advantage is. People are throwing good companies at sensible prices for you to participate in.
Correct.
So I think they will turn when, say, India earning or the major macro risk like, the energy crisis in the Middle East seems to be easing. They will turn. And the good advantage is you are getting this because of this bad news only. So, right, so you have to take advantage of the bad news.
And since you spoke about India Inc. earnings, what are your expectations for FY27, for FY28? What kind of earnings growth are you penciling in?
So earnings have already started to improve. At least in the third and fourth quarter, there have been recent decisive improvement in earnings because of GST and the income tax benefits, right? In the first half, you may have some trouble because of because of West Asia crisis. But I think directionally, FY27 second half, FY28 would well be much stronger earnings than we have seen in the last 5 years. So it's possible that we may have early double-digit earnings very comfortably 1.5 years out. Investors have to buy for that. I mean, you cannot buy for today. See, the value of earnings of, say, 1 quarter or 2 quarters is less than 1%, 2% the value of a company.
Correct.
So I think the minute you start looking out, you'll end up with expectation of very sensible earning growth beyond the near-term challenge of the Middle East.
Some mega themes that you're bullish on from a 8 to 10 year perspective, something like defense that has worked well for investors over the last 5 years. Any big theme that you're bullish on at this point in time?
So India has so many themes I can't tell you because what's happened is there is still a lot to be done in India, right? And we are at early stages in everything in terms of either you look sector penetration or you look at new sectors emerging. So luxury as a theme is a very large theme in India, right? That will also become substantially large. So today it's very, very small in the context, right? Then you have even basic consumer discretionary. You're starting to have a new wave of that, the hockey stick you talk about in terms of penetration. That is yet to happen.
Correct.
So that space is all left, right? Then you have, in fact, if you go sector by sector, there is tremendous opportunity here. And nothing has been, I would say, completely overachieved in India or whatever. There is massive penetration opportunities in auto, significant in pharma. So there's enough and more to be done. So there's no one single small thing. I think the broader construct itself in India allows for multiple opportunities. Luxury appears most immediate and most obvious here.
Clearly, and luxury in the sense premiumization, and that is one theme that has played out over the last year.
Premiumization, and that's played out very well. In fact, the beauty of India is India has a premium market which is comparable to the most premium markets globally. It has a mid market, it has a market with less income, right? So you have multiple, in each of these categories you'll find opportunities.
Right. From an asset allocation perspective, given the rally that we have seen in precious metals, how much allocation would you recommend into precious metals, into fixed income, into equity at this point in time, and within equity, India and global?
Yeah. So primarily, given the substantial outperformances of other asset classes in the last 2 years, 1.5, 2 years, I think the larger bias is towards equities, maybe 70% to equities.
That is also recency bias, isn't it?
No.
Because the rally has been so much, people are investing, is it?
So, no, not in equities. I'm saying the rally has been so much in precious metals in the last 2 years, people are investing there.
Correct.
So the idea is to do reverse of that, right? So the idea is to have larger allocations to equity because of what's happened. Have some time frame. See, getting every calendar right is not easy, right? But if you have some time frame, equities are, especially because of the sell-off and all that, are sensibly priced. So that's one. Debt also has a reasonable role to play. So debt can have the remaining 15-20% allocation to that. And commodities and precious metal could be 10% now versus maybe 20% when they were far more attractive.